Welcome back to Revise and Resubmit, the podcast that takes, those really dense academic papers and makes them surprisingly interesting. I'm Pavlov.
And I'm Nikita. Today we're diving into a research paper, and it's all about the relationship between related party transactions and corporate social responsibility, specifically in India. It's really a fascinating look at how these two things, making money and giving back, can actually be intertwined.
Yeah, and it gets even more interesting when you think about the context of Indian companies.
Okay, so before we go too deep, can you remind us what related party transactions, we'll call those RPTs, what are they actually?
Sure. An RPT is basically any transaction between a company and, parties that are closely connected to it. Think like subsidiaries, major shareholders, or even key executives.
Okay.
This can include stuff like buying and selling goods and services or lending and borrowing money.
So it's kind of like lending money to your sibling. It could be totally fine, or it could get messy.
Exactly. And that's why RPTs are so interesting to study. They have this potential for duality, right? They can be used for, totally legitimate business reasons, like streamlining operations or getting better deals, but they can also be misused for personal gain. And that could really harm the company and its shareholders.
And this research paper breaks down RPTs into two main types, right? Business RPTs and then tone RPTs.
Yeah, that's right. Business RPTs, those are often about efficiency and cost savings. Like imagine a big Indian company, a conglomerate. Maybe one branch supplies raw materials to another branch, makes sense logistically, right? And could save both companies money. And that efficiency, in theory, could free up more resources for things like CSR initiatives.
Okay, so it sounds like those are the good RPTs. So where do these tone RPTs fit in?
Tone RPTs are where things can get a little more complex. These transactions often involve dealings with directors, officers, and shareholders, or what's called DOS. Tone RPTs might be less formal, less transparent, and that's where you see the potential for misuse increase.
Okay. And the research uses this term tunneling to describe that misuse. Can you explain what that means and how it happens?
Tunneling is basically when someone siphons off company funds for their own gain. Like think of a controlling shareholder using an RPT to, say, transfer profits to a private company that they own, essentially enriching themselves at the expense of the other shareholders, which obviously raises some ethical concerns, but it can also directly reduce the resources a company might otherwise use for CSR.
So we have these two sides of RPTs, potentially good and potentially problematic. What did the research find when they looked at India specifically? How common are RPTs over there?
One of the most interesting findings is just how many RPTs there are in India. The National Stock Exchange of India found that over 75% of companies listed on the exchange reported RPTs in a recent year.
Wow.
Yeah, it's a lot. And this is significant considering India's corporate landscape, which is dominated by large conglomerates that are often, family controlled.
And that ownership structure seems like it could be a factor here.
Absolutely. When ownership of a company is really concentrated in the hands of just a few people, it can be much harder to monitor those RPTs and to make sure they're being used ethically. That lack of transparency can be really bad for minority shareholders. And as this research suggests, could impact a company's commitment to CSR.
That makes sense. So how does all of this play out when it comes to CSR in India? Is there a clear connection between RPTs and how much companies are giving back?
This is where the findings get really interesting. The study found a statistically significant positive link between business RPTs and CSR spending. The correlation was 0.116, which indicates that when companies engage in those more efficient good RPTs, they tend to spend more on CSR.
So more efficient operations lead to more resources for social good. That's kind of what we'd hope to see. What about tone RPTs? Did the research find a connection there?
Yes, but it was in the opposite direction. The study found a statistically significant negative relationship between tone RPTs and CSR spending, with a correlation of MOGA 0.082. Remember that tunneling we talked about? It seems that when companies are engaging in those potentially unethical tone RPTs, their CSR spending tends to go down.
Makes sense. If resources are being taken away through tunneling, then there is less left over for those social initiatives. But it seems like there's even more to this. The outline mentioned something about earnings management playing a role.
Right. It's not just about the type of RPTs, but also the broader financial context. Earnings management is basically manipulating financial records to make things look better than they actually are.
So kind of like airbrushing a photo to hide those imperfections.
Exactly. And the research suggests that this practice can make things even more confusing when it comes to RPTs and CSR.
Okay, so how does earnings management fit into all of this?
The study found that earnings management actually negatively moderates the relationship between business RPTs and CSR spending.
Whoa, hold on. That sounds complicated. What does that mean in simpler terms?
It means that when companies are engaged in earnings management, even those seemingly good business RPTs might not be telling the whole story.
So they might be using those business RPTs to hide their actual financial position, making it look like they have more resources for CSR than they really do.
Yeah, exactly. It's kind of like, when people dress up a used car to make it look new. On the surface, it seems appealing, but there could be all sorts of problems underneath.
And that's where transparency is so important. Investors and consumers need to be able to see past those misleading financial maneuvers.
Absolutely. And that's where we go back to the ownership structure. The study found that concentrated ownership actually makes that negative connection between business RPTs and CSR spending even stronger.
So in companies where just a small group of people have most of the power, even those business RPTs are more suspicious when it comes to CSR.
That's what the data is telling us.
Yeah.
It could be that the people in control are using even those, seemingly good RPTs to benefit themselves instead of focusing on social responsibility.
Wow, this is really starting to sound like a tangled web RPTs, CSR, earnings management, ownership structure. It seems like if you're an investor, you really need to do your research before you put money into an Indian company.
You got it. Investing in a company goes beyond just looking at their profits or their CSR reports. It's about understanding how the company works on the inside, their governance practices, and how all these different factors interact.
So if I'm looking at an Indian company as an investor, what are some things that should set off alarm bells based on what we've been talking about?
Well, a lot of tone RPTs, that's definitely something to worry about. It could mean that the people in control are putting their own interests ahead of the other shareholders and maybe even the company's commitment to CSR.
Okay. What about business RPTs? Are those always a good sign?
Not always. While business RPTs can be completely legitimate, you have to look at the bigger picture. Are there signs of earnings management? Is ownership super concentrated? These things could mean that even business RPTs are being used to cover up the real financial situation or to help out a select few.
So transparency is key. Investors need to find companies that are open about their RPTs, have good corporate governance, and aren't playing games with their earnings.
Exactly. And the best case scenario is a more spread out ownership structure where power isn't all in the hands of a small group.
But let's be real, that perfect scenario might be tough to find, especially in India. So are investors who care about CSR just stuck?
Not necessarily. Every investment has its pluses and minuses. But by understanding these complex issues, investors can make smarter choices. They can choose to support companies that match their values and that show they are really committed to doing well financially and being socially responsible.
So it's about doing your homework, understanding the details of RPTs, and making a decision that fits your own goals and priorities.
Right. And remember, the research didn't just look at CSR spending. They also looked at data from Bloomberg's ESG index. That's environmental, social, and governance. This covers things like the company's impact on the environment and their social responsibility actions.
And did those findings match up with what they saw with CSR spending?
Yep, the results lined up. Companies doing business RPTs tended to have higher scores on the ESG index, especially for environmental and social stuff. Companies with lots of tone RPTs had lower scores. This just adds to the evidence that the kind of RPTs a company uses can tell you a lot about how committed they are to sustainability and social responsibility.
Interesting that even with these broader ESG measures, that same pattern still shows up. This isn't just about companies donating money to charity. It's about how they do business and manage their relationships with related parties.
Yeah, absolutely. It speaks to a company's culture and how committed they are to doing things the right way. And that's something you can't always tell just from a CSR report.
This deep dive has definitely given me a whole new way of looking at corporate social responsibility. But before we finish up, there's one more thing from the research I want to touch on: governance. They looked at how the relationship between RPTs and CSR changed depending on how strong a company's governance was.
Right. They found that companies with stronger governance, especially those with more independent boards, were better at handling the potential downsides of RPTs on CSR.
So good governance is like a safety net, making sure that RPTs are used the right way and that the company keeps its social responsibility promises.
That's it. In well-governed companies, business RPTs were more likely to be about real efficiency improvements and not about trying to make CSR spending look bigger than it was.
Yeah.
And these companies were also better at stopping tone RPTs from being used for tunneling or other bad practices.
That's good to hear. It means that even in a place like India, where RPTs are common and ownership can be concentrated, good corporate governance can still make a difference.
It sure can. Strong governance helps make sure that RPTs are used responsibly and that everyone's interests are protected, including minority shareholders and a wider community.
This raises a good question. What about companies that don't have very strong governance? Are they just going to fall into the RPT trap? Or can regulations help even things out?
That's a great point. While strong corporate governance is the best, regulations can play a big role in preventing abuse, especially in companies that don't have strong internal controls. The study talks about the need for clear rules about disclosing RPTs, having strong audit committees to check these transactions, and stricter supervision from regulators.
So it's like putting up guardrails so those RPTs don't go off track.
Exactly. These regulations can make it riskier and less attractive for companies to do unethical things with RPTs. They can also help protect those minority shareholders and make sure companies are responsible for their social responsibility promises.
So it seems like we need a multi-pronged approach to deal with the whole RPT and CSR issue. Companies need to make strong corporate governance a priority. Investors need to be careful and make informed decisions. And regulators need to set up a system that encourages transparency and accountability.
Couldn't agree more. It's a shared responsibility, and it's by working together that we can make sure RPTs are used ethically and that they contribute to a more sustainable and fair business world in India.
This has been such an eye-opening deep dive. I'm starting to see RPTs everywhere now. But before we wrap things up, there's one more interesting detail from the research I want to bring up. The paper looked into the specifics of India's mandatory CSR regulations.
You mean the fact that India is one of the few countries with a law that requires companies of a certain size to spend a certain percentage of their profits on CSR?
Exactly. Did the research look at how these regulations affected the relationship between RPTs and CSR?
They did, and what they found is pretty interesting. Even with those mandatory regulations in place, both business and tone RPTs still had a noticeable impact on CSR spending.
So just having rules doesn't completely erase the influence of RPTs on CSR. It means a company's own intentions and actions are still the most important factors.
That's right. Regulations can set the stage, but it's the company's culture, its commitment to being transparent and ethical, that really determines the true impact of its CSR efforts.
This brings us back to the importance of looking beyond the surface. It's not just about checking off the CSR box or meeting the rules. It's about understanding why a company is doing what it's doing and if its actions really match its promises.
I agree completely. This research reminds us that when it comes to CSR, the details are super important, and understanding the ins and outs of RPTs is a key part of that.
This deep dive has given us a lot to think about. We'll be back in a moment to wrap things up and leave our listener with a final thought. We've really gone deep on this topic today, from the different types of those related party transactions to how they could be misused, and the importance of good corporate governance. It's a complex issue, that's for sure, with a lot of implications.
Yeah, for sure. And what I think is really interesting is that we've been talking about investors a lot, but what we found about these RPTs is relevant for everyone, even if you're not, buying and selling stocks every day.
That's a good point. What do you mean by that?
Well, think about it. Every day we're making choices about which companies we support, right? Like when we buy things.
Yeah.
We might be attracted to brands that talk about their social responsibility efforts.
Yeah.
Or that say they're having a good impact.
Right. We see those messages all the time.
Exactly. But what if instead of just believing those messages, we dug a little deeper? What if we started asking questions about how a company actually operates? Their relationships with their subsidiaries, and their important employees, their approach to those RPTs.
You're saying how a company handles those RPTs can tell us how serious they are about social responsibility.
Right. Are they using those RPTs to make their business better and create value for everyone? Or are they, trying to find loopholes, putting profits above doing what's right, and maybe even doing things that could hurt their social impact?
So as consumers, we should be looking beyond those sometimes flashy CSR reports and asking some tougher questions.
I think that's a good idea.
Yeah.
Consumers have a lot of power. What we choose to buy sends a message to companies about what we believe in. By supporting companies that are honest about their RPTs and show they really care about ethical behavior, we can help make businesses more responsible and sustainable.
It's like our purchases are votes.
Yeah, that's a great way to think about it. Every time we spend money, we're choosing to support a specific company and the way they do things. And all those choices, they add up and can really shape how businesses act.
So next time we're shopping, whether it's at the store or online, we should remember these insights about RPTs.
Exactly. Don't be afraid to ask questions, to do some research, to, look past the surface. The information's out there. And by becoming more informed consumers, we can help create a world where businesses care about both profits and purpose.
I love that. Thanks so much for being here today. It's been fascinating to learn about this complex issue, and we hope everyone listening has learned something they can use in their own lives.
It's been my pleasure. And remember, whether you're investing, buying something, or just a concerned citizen, we all have a part to play in making sure businesses act ethically and holding them accountable for their impact on the world around us.
That's a great note to end on.
And don't forget to subscribe to Revise and Resubmit on Spotify and Apple Podcasts for more captivating deep dives like this one. And if you're enjoying the show and want to support us in creating more insightful content, consider becoming a patron on Patreon. Every contribution helps us continue this journey of exploration and discovery. Until next time, keep those minds curious, keep questioning, and keep revising and resubmitting.